I failed miserably on my goals in 2023. Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. I failed miserably on my goals in 2023. So we had a goal set to acquire $100 million worth of real estate, value add real estate, mostly multifamily, but also looking at, different retail opportunities, industrial opportunities, self-storage opportunities. And we failed miserably. We purchased $18 million, $18 million. That's it in 2023. Now, did I set my goals way too high in 2023 or what happened? And I would say possibly set our goals a little bit on the high end. But you see, in 2022, we weren't that far off. And in 2021, we had purchased quite a few properties. And so we wanted to continue that momentum moving forward. But everybody knows 2023 ended up being a difficult year, a much different year. And we actually, I wouldn't say we stopped. We didn't stop looking for properties. We didn't stop being actively underwriting properties, talking with brokers, digging deeper. We're actually probably doing better at our underwriting, better at our communication with brokers, better at all those things that are going to get us deals, but we're getting less deals. And so obviously interest rates, those skyrocketed in 2023. Prices didn't come down to match that. We're starting to see that decline and we're starting to see that gap close quite a bit. But we were able to purchase just that one building. And honestly, it's disappointing, but that's okay. Like, we are just fine with that because we purchased one building that's, in our opinion, going to be very good, right? In our opinion, and it already is turning out to be a good investment. We think it's going to continue to improve and become a better and better investment. We're paying cash flow dividends to our investors. We don't see that ending. We see that continuing. We see that growing. This is a long-term fixed rate debt, very secure loan. And it's kind of the property, the profile, what we're looking for now. And that's a big thing that's changed also. And I think this is, so we've got this reset happening in 2020, 2019, 2020, 2021, 2022. We saw this massive skyrocket in commercial real estate prices, massive skyrocket. And I think ourselves included got caught up in the hype, the opportunity, the excitement of it. And people were doing deals that they maybe shouldn't have been doing and putting on debt that they shouldn't have put on. And self-admittedly, we put on short-term, floating rate debt that I'm not that comfortable with. And we're not doing moving forward. And we're looking at what are some of the mistakes that we made in our underwriting assumptions. What are some of the mistakes that we made in our financing assumptions? What are some of the things that we're seeing other sponsors, their mistakes that they made in their underwriting assumptions, they made in their financing assumptions, they made in their performance assumptions? What are some of those things that we're seeing in the industry that we're seeing be problems? And how can we correct that and improve our business moving forward? You see, we take a lot of passive investors' capital and put them into the deals and partner with them. Well, the number one thing is to not lose other people's money. And so everything we do needs to be thought of as how can we preserve our investors' capital? How can we not lose their money? And I think the biggest thing that we are changing moving forward is the debt structure. We're making sure our debt structure is set up extremely well positioned for our investors. And so there's a big risk that's taken off the table in that case. We're also looking at these properties as cash flow. We have to have cash flow. There has to be upside in the income and in the equity, but it also has to have a story today, a reason why we bought it today, not just future, but what's going on right now. And so that's really important as well. And so 2023, although we totally blew our goals, right? We did terrible. We raised $10 million. We wanted to raise $40 million. We bought $18 million worth of real estate. We wanted to buy 100 million. We just didn't do it. But it's okay because we learned from the mistakes we're seeing in the market, mistakes that we've made, mistakes that other groups have made. We're improving our current operations, and we're looking at best practices in the industry. What are other people doing that are successful? What have we done in the past that's been successful? What are we doing today that is successful? And we're really trying to focus in on that. And that's more or less our 2024 goals, right? Is to continue to improve our asset management side of the business, continue to improve the property management side of the business, continue to make things more efficient and effective, and communication more open and clear to everybody involved. And then, of course, we do have goals of purchasing real estate. I think, and I mentioned this on a previous episode, is I think that 2024 is going to be a really interesting year. I quite frankly don't expect there to be a ton of transactions. I think 2023 transaction volume was down by, I think across the country, like 46% or something like that. I expect 2024 to be, somewhat of the same. Maybe we're going to see a ramp up a little bit in transaction volume as the year goes on, but we'll see. Time will tell. I don't expect it to be. So do we want to buy more assets? Absolutely. Do we want to continue to grow as a business? Absolutely. There's no denying that. The good thing is we've set our business up to not have to. We run lean. So I think when you're looking at your business and you're reflecting on how you did in 2023, 2022, and so on, and what you want to do moving forward, one thing that I'm proud of in our company is that we are lean and that we don't have to buy deals just to pay our staff. Okay. Our staff is paid by our current deals that we have going on, and we have enough coming in for that. We don't have to buy new deals. Now, again, do we want to buy new deals? Absolutely. Are we doing everything we can to buy more deals? Absolutely. We are underwriting every single deal that makes sense for us to underwrite. We've got very crystal clear. That's the other thing too, is in 2022 and 2023 and before, this early part of 2023, I would say our investing criteria was pretty defined, but now it's extremely defined. And we know exactly what we're looking for in our underwriting. We know exactly what we're looking for in a deal. So it's very quick and easy to go, this deal works, this deal doesn't work. Now let's dive in deeper, or let's throw this out the window, right? And so I think as you look at your business, make sure you have well-defined goals, well-defined processes, well-defined criteria, and make sure you're setting yourself up for a business that can work in good times and can work in bad times, right? Times where, I don't want to call it a bad time, but times where we're not transacting at the volume that we'd like to transact, right? For our business, growth, it means purchasing, and we're not growing. We're not purchasing. We're not growing. So that's just how it is. So anyways, that's where I'm at. 2023, it is what it is. We chalk that up for a lot of growth and learning in the business, not growth as far as increasing business. 2024, we're hoping we start increasing the business, but we're going to still focus on improvement and just becoming better. And I think that's really important as you slow down and look at your portfolio, that you really go, hey, how's my business, right? How do I improve it? What can we do for our staff, right? What can we do for our team to make it a better company? make it a better business to be part of. Hey, thanks so much for listening. I appreciate you being a loyal listener. I would love to have you go on to our Facebook page and subscribe, give us a thumbs up, go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. Your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out, and we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.